We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks recovered on Friday afternoon to clinch fresh record highs despite renewed trade tensions after President Trump said he was terminating talks with Canada, and things were very volatile intraday, but we capped off the day very green, led by the mega caps to cap off what has been an exceptional week in the equity markets. Guys, Google, Meta, Com Services really leading the way. This entire sector was green, from Google, Meta, DoorDash, Netflix. Even the telecoms were very, very green here in Com Services. Consumer cyclicals was also very green, everything except for Tesla, which was down 0.61%. But Tesla, again, had a very, very good week. And we had a couple of the other mega caps not perform as well. Apple was flat. Microsoft and the entire infrastructure space was kind of down. AVGO was down. Nvidia up 1.76%. And all in all, there were some losers today, but mostly winners. And when you have these mega caps outperforming, you're going to get the day that we had today with the S&P 500 up 0.5 percentage point. The majority of sectors all gaining. XLY, XLC, XLI all up in excess of 1%. The only sectors that didn't gain today was energy, healthcare, and the technology sector. And again, only down 0.12%, with the worst performing asset class being gold, down 1.81%. And again, that has to do with some of that geopolitical tension unwind. That is why we're also seeing energy down 0.52% and having a terrible week. That is. It was also green in the mid caps and small cap space, but again, small caps having a great week, not quite performing here on Friday, with small cap growth being the only factor segment that was down on the day, but only down 0.2%. Everything else was green. Mid cap growth outperformed, large cap core outperformed, but we saw green performance in pretty much everywhere across the board in the US space. Globally, it was mixed as well. China was very red and that weighed on Asia. But the rest of Asia, very, very green. Australia was red. Middle East was red as well. But Europe was definitely the most bullish geography yet today, with North America, again, mixed with Canada because of some renewed trade tensions. And then South America, again, also very, very mixed. Now, the S&P 500 had a crazy day. We were very, very bullish up until we got some trade news from Donald Trump. Then the S&P 500 paired all of those gains and then some, actually appearing negative, but dip buyers stepped in a very big way. And while we didn't get back to the intraday highs, we did go ahead and notch a new all-time high for the S&P 500. Now, the reason why we actually had this dip right here had to do with Trump terminating trade talks with Canada over a tax on technology companies. This is Canada's digital services tax. It's mostly going to impact US tech companies. Trump said it was a direct and blatant attack on the US, so he terminated trade talks. He then came out and said that the US will set a new tariff rate on Canadian goods within the next week. And again, Trump playing very, very hardball. So this is the one bear case for this weekend. Things can really unwind if we get a ridiculous tariff from the Trump administration. But my bet, we probably see Trump taco out, put a baseline tariff, and the market continues to move higher, because we also got some good news from China. Now, a Chinese trade deal apparently was signed, and we're getting some tidbits as to what's in there. I don't think it's finalized, and that's why the administration hasn't released the full trade deal. Long story short, the US said that a deal with Beijing will expedite rare earth exports from China. Tariffs on China are now 30%. Theirs on the US is only 10%. That's all we really got. We haven't got the full deal. I think there's going to be more to come that will be released this weekend. But long story short, we got this bearishness from the Canadian deal, but bullishness from the China deal. And I think the China deal is what really matters, especially in the grand scheme of things, that China opening up its country to US firms. That is ultimately what Trump wants. We also did get some economic data, and we had some very, very mixed data. When we look at the PCE, right, 2.3 versus 2.3%. So we came in at the consensus for inflation. However, personal income and personal spending came in a lot weaker than expected, negative 0.1 versus the consensus of 0.1. So we actually saw negative spending growth, and we also saw negative income growth when the consensus was for 0.3. So this run was absolutely crazy, but it does look like the market looked through all of these numbers, especially because inflation numbers came exactly in line with the consensus. We did have a couple of Fed speakers, and then the University of Michigan sentiment came in a little bit better than expected, 60.7 versus 60.5. And then some market movers here today. Nike up 15% today. Absolutely crazy move on the back of its earnings. It beat on the top line, beat on the bottom line, had some very positive guidance, and it does officially look like this is a trough for everything in the business, revenue, margins, etc. And guys, we're going to have a full breakdown of Nike on the FinFluential Media, my second channel, link in the description and link in the comments below. Uber was down 1.86% today after what was a very good day in the S&P 500. And that's because Canaccord Genuity downgraded the ride-hailing platforms, Lyft and Uber actually, to hold from buy because they believe a robo-taxi future is completely uncertain. Canaccord said it would only take 411 robo-taxis to replace all Uber and Lyft drivers in the US, which is absolutely crazy. And so as a result, the stock's going to fall, but the stock is also up like 70% from the lows. It's been on an absolutely crazy run. And so we're just seeing, again, maybe some profit taking at the highs. And then Palantir is down 7% today after President Trump said at the NATO summit that the conflict in the Middle East is over for now. Obviously, that's going to impact Palantir, down 7%. But again, it also does look like a little bit of profit taking. But for a company trading at 300 times earnings, 60 times sales, you would expect volatile days like these. It's simply what you get for a company trading at these valuations. But for everything we saw today, there was about 3,000 advances, 3,200 decliners. We saw net inflows in the NASDAQ 100 and the New York Stock Exchange, with the S&P 500 gaining 0.52%. And then you saw market momentum remain as it has been all day. But we did see a little bit of a degrade from yesterday, but still well above the 50% mark, but still looking to gain the 50% mark in the 150 and 200 day. And this is actually the bull case here, because if we go ahead and gain this right here, stocks can actually march higher, even despite making an all-time high today in the S&P 500. Now, guys, looking at the charts, and this is the 5-day return for all of the major indices. And you can see Bitcoin was the best performing index here today, up 5.68% today. A lot of the gains were made very early on, and then it actually did trade a little bit down, but, still up in a very big way for the week. The Qs and European stocks were in second place, gaining 4%. The Dow Jones gained 3.8%. China stocks up 3%. The S&P 500 up 3.5%. Small caps also gained, up 3.47% today. The equal weight up 2%. TLT, even bonds were up 0.5 percentage point, and the worst performing asset class was gold. So we definitely saw a risk on move. We moved out of stuff from gold, and I guess you could say out of stuff from TLT into just equities and risk assets, particularly with Bitcoin up 5.68, just for risk. A very, very solid week for risk assets as a whole. Looking year to date, things haven't really changed from last week. You can see the S&P 500 up year to date 5.18%. The Qs up 7%. Bitcoin up double digits for the year. Guys, this is about what the average year, we're about 6 months in the year. The S&P 500 up 7%. The S&P 500 normally returns about 10% every single year. So look, despite all of the volatility we've seen, we're probably having about the average year in the S&P 500 right now. The worst performer is the IWM, up 2.5%, down 2.5%. TLT bonds down 0.21%, and then the Dow Jones only up 3% for the week. And the best performers are European stocks, gold, and Chinese stocks, all up in excess of 20%. Guys, in fact, European stocks now outpacing gold. That is absolutely crazy. But let's actually talk about what we actually saw here today. Now, the S&P 500 gaining half a percentage point, the Nasdaq 100 gaining 0.39%, and the IWM basically flat. So really what we saw was a move into sort of just larger caps, the S&P 500, the Nasdaq, and then we saw stuff like mid caps and small caps take a little bit of a back seat. Growth still outperformed value. Obviously, European stocks were the best performers today, up 1.14%. Middle Eastern stocks, Israel ETF was down 1%. Australia was down. Chinese stocks were down. Chinese stocks were up half a percentage point today. Volatility was very weird. Spot VIX was down. Front month VIX up 0.36%. So the market's seeing a little bit of more volatility in the future, less so in the near term. Very interesting. Yields across the board were up, but that's coming off a week where we've seen yields take a step down pretty much every single day except for Friday. The dollar was down 0.1%. TLT fell. Bitcoin flat. Ethereum flat, and then gold was down 1.5%. Silver down. WTI down as well. And guys, the S&P 500 has hit an all-time high, a closing high. You could see that is the case right here. That was a previous high. This is officially an all-time high. What a crazy return. Absolutely insane. If we actually go ahead and quickly look at the weekly chart, look at that weekly candle. That is absolutely insane. That is literally a bullish engulfing candle. One of the most bullish candles we've had since coming off the lows right here. This is the type of candle you see coming off lows. For example, look at this candle right here, right here, right here. That's exactly what we got today. That is a signal to the market that we probably will go higher. You can see the core wall of our model did go higher. That is a weekly all-time high close. And guys, you have a situation here in the S&P 500 on the weekly chart where you just keep making higher highs, right? And all-time highs. We just close at an all-time high. So that is bullish. There is nothing more bullish than all-time highs. However, we do have to be wary of what is to come over the next week. And I think ultimately, guys, what's going to happen next week is going to be dependent on some of the trade news that we get this week, particularly with China and particularly with Canada. And we'll need to see which outweighs which. If we start to see an unwind of some of the trade deals, like we saw with Canada today, that's not going to be good. Ultimately, if we do get more details about the China trade deal and that leans in the positive direction, that's really, really good. And the market's going to take that in stride and we'll look past the Canada situation. However, if we start to see some really bad rhetoric about Canada, that can impact the market. So next week, wait for this weekend. Let's see the news flow we get, and then we'll react accordingly. But there's no doubting it right now that this is very, very bullish. We probably do go higher sometime next week. But that is all depending on the news we got. I mean, even in the midst of what was very poor personal income outlays, personal spending, personal income data, we actually continue to move higher. Inflation data was in line, and this economy is absolutely roaring. And as a result, equities will move higher. So the path of least resistance, guys, is higher. However, if we do get some unfavorable news from the trade front, we can definitely see a little bit of a pullback. But as long as we remain above the 60,028 level right here, you want to remain constructively bullish, especially having just hit an all-time high. And I was thinking to myself, where would we be right now if it wasn't for all of this trade shenanigans? And I think we'd be close to 6,600. And I think that's where the market's going to go, assuming that trade deals go completely smoothly. And also next week, guys, we're officially voting on the budget bill. So that's just more upside for us. And I think that's part of the reason why the market is pricing this in right now. Something else is that we're going into what is the most bullish 2-week period of the year, into July. July kicks off on Tuesday. That is the first trading day of July. And that tends to be a very bullish 2-week period of the year. Maybe we did see a little bit of front running right here, but July tends to be very, very bullish. And so expect much more of the same over the next week, 2 weeks, and possibly even 3 weeks. Looking at the Nasdaq 100, very similar situation. Let's wait for the news flow over the weekend and then determine where we'll go on Monday. I'll keep you updated. And then from there, we can either look to buy dips or we can just sit out and farm some of the volatility that comes in the week, especially with our options positions. Looking at the RTY, I really do like small caps. I really do like mid caps at this level. I think you're getting exceptional companies growing earnings a lot, and they trade very, very cheap. And while the mega caps have had a massive run up, we haven't quite seen the same run up, in totality from these mid caps to small caps. So definitely look at like a quality small cap ETF. That's the place to go, I reckon. Looking at European stocks, very strong move right here. it looks like we probably did front run the dip to 527. So this is probably where you want to buy. In fact, I think what you actually want to do in this situation is probably have something like that, sort of have like an area where you probably want to go ahead and buy European stocks. It does look like we are a little bit behind that now. It does look like we are probably going to go ahead and move higher, and European stocks have been on an absolute tear so far this year. And I think they're going to continue to go higher. I think we're going to see all-time highs for European stocks. The Israeli ETF was down 1%. I think if we can get a pullback to this 48 level, even maybe the 47 level, I think that'll be a great buying opportunity right here. That is probably where you want to go ahead and buy. I think that'll be a great place. Looking at gold, guys, yeah, it looks like it's unwinding. Gold is looking like it's unwinding. I mean, when you get this risk on sentiment, you're going to see money going to Bitcoin. You're going to see money going to equities. You're going to see money coming out of gold. Gold has been on a good run. You know, I was very, very cautious at the highs right here. And look, we've broken below this level. We're at this level. We did see a little bit of buyers come in at the 3,200 level, but I wouldn't be surprised to see 3,100, 3,150 in very short order for gold, especially if this risk on environment continues, especially when we do see geopolitical tensions unwind, trade deals unwind, and then we do have the budget bill coming. That could support gold a little bit, but ultimately, I think what we're going to see with gold is just a long-term consolidation, maybe the next 3-6 months, and then we'll make our next move to the upside or the downside. And then looking at Bitcoin, guys, and Bitcoin has done exactly what I said it would do over the last 3 months. We were big buyers here. We were adding at the lows right here. And now we are making our way to the 150, potentially 140,000 mark. Guys, this is sort of like a bull flag forming right here. We're going to break above, and then we're going to go ahead and hit new all-time highs for Bitcoin. It is only inevitable because it tracks M2 money supply very, very closely. You can see when M2 money supply rips, Bitcoin rips. When it dips, Bitcoin dips. M2 money supply is ripping. When you offset it by about 80 to 100 days, this is where we are right now. We're looking for the next move to the upside in Bitcoin. So Bitcoin is where you want to be. And guys, if you're looking for an individual stock, I've been saying all week, a great stock to buy is Evolution AB, EVVTY. I was saying it all last week. If we just look at the last 5 days on a percentage return basis, the stock is up 9.8%. And I do think we are going to go higher. I think we're going to go ahead, close this gap right here at the $86 level, right here at the $87 level. We're going to go ahead and close that gap into its earnings. If you take a measured move from the lows right here, the stock is up 18% in just a couple of weeks. Absolutely insane. Onward and upward for Evolution. So, and this is a European stock. It's not a US stock, but you are getting a little bit of US exposure in it as well. So for all intents and purposes, guys, this is probably the best stock you want to be in over the next couple of months. Momentum is definitely on its side, especially intra-month. And diving into sentiment, this is CNN's Fear and Greed Index, currently sitting at the 62 mark, which indicates market sentiment is leaning towards greed, suggesting investors are more confident than fearful. And to be honest, I'm not surprised, because we do know that over the next 2 weeks, the first half of July, it tends to be a very bullish period, and there's a lot of bullish news going on, especially with the ceasefire, trade deals, potential rate cuts, etc. But ultimately, the most bullish thing has to do with earnings. Guys, Q2 earnings season is virtually over. 13.6% in earnings growth, 5% revenue growth, 76% of companies reporting above analyst expectations, 16% earnings growth if you actually exclude the volatile energy sector. Incredible stuff, but that is behind us. Looking ahead, we're looking at about 9% growth in the overall market, excluding the Mag 7, 17% growth. If we actually look at the Mag 7, this is for the remainder of 2025. And here's what's really interesting about these earnings estimates, right? Looking at the technology space, the technology sector is up about 3% for the year. The forward earnings estimate has grown about 4% for the year. In other words, the forward PE has actually declined. Tech stocks have gotten cheaper. Financial stocks have roughly stayed the same. Consumer discretionary stocks have gotten significantly cheaper, but that's because the prices declined and earnings have also declined. So it's a double whammy. Yes, they have gotten cheaper. That's because they've gotten cheaper for a reason. Earnings have fallen and price have fallen significantly as a result. Now you can see healthcare is down nearly 4% for the year, has gotten about 4% cheaper, and that's because earnings has actually increased ever so slightly. The sectors where you don't really want to be a part of, for example, industrials, up 9%. Earnings barely budged, which means they're 9% more expensive, and that is tangible. We see a similar situation here in the energy space, materials, and real estate. So guys, for all intents and purposes, the places where you really want to be right now is sort of like the healthcare space, discretionary space, technology, and financials. The market is obviously placing great weight on defensive companies and companies that are actually growing their earnings. And you could see this with their price change, relatively speaking. Now, let's actually talk about the macro really, really quickly, guys. Q1 GDP came out yesterday and the number came in at negative 0.5%. But we're looking to normalize this in Q2 because they're looking to print about a 3.5% according to the Fed's GDP now. That's really, really solid. And when we look at the consumer dashboard, consumer metrics, real income growth is still very, very solid. You can see at 3.6% PCE inflation over the last 1 year is close between 2.1, 2.2, 2.3%, somewhere in there. At the 6-month annualized, it's 2.6, 3-month annualized, it's 2.1. But then when you look at disposable income and employee compensation is actually towering above the rate of inflation, both on the 3-month, 6-month, and 1-year annualized basis. It's very, very solid. The consumer is gaining pricing power against the rate of inflation. That's great for spending, great for the consumer, and let's hope continues, because if it does, the consumer will keep spending, and you never want to bet against the American consumer, especially when things are getting cheaper relative to their incomes. And then guys, looking at earnings and data next week, in terms of earnings, there's virtually nothing at Constellation Brands after the close on Tuesday. That's about it. Nothing of consequence. And then with regards to data, we kick things off on Tuesday with the ISM manufacturing numbers. We also get JOLTS openings. And on Thursday, we get the non-farms, the unemployment rate, and the ISM services. We're also going to get the ADP numbers, initial jobless claims, and a whole bunch of other figures. But these are the high impact news and data points next week. Guys, but if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.